Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now. It's 24 hours. Yes, now the MPR for Nigeria has been hiked by 150 basis points. So it's now 26.25%. This should put some smiles on the face of investors, especially those who are interested in the fixed income market, which seems to be the reigning market now in Nigeria. Even as we speak, the central bank is conducting an auction, the Treasury bills auction at this time. A lot of billions of naira worth of maturities waiting for you to tap into there if you're interested. So we'll see how that affects sentiments at this time. But let's start with the NGX, which seemed to be recovering second straight day, I think 0.04% at 98,320.50. South Africa is also in the green. We see other markets, that's Egypt and Kenya. Egypt is in the red, 0.25%, while Kenya closed in the green, 1.30%. But let's head back to the fixed income market. That's where interest is at this time. 24 hours after that hike in interest rate, we have Bankole Odusonya. He's the chief dealer. Polaris Bank joins us. Mr. Odusonya, good afternoon, and thank you so much for your time. I don't know if to say congratulations for better yields at the fixed income markets.
Good afternoon. It's been quite an active day. Of course, we've had the Nigerian Treasury bills auction today. 508 billion of Nigerian Treasury bills will be maturing today, and we expect the central bank to reissue the exact amount. The difference here is that this particular Nigerian Treasury bills are being offered by the Debt Management Office and not the central bank in itself. Of course, the central bank will usually issue OMO instrument to mop up liquidity in its chest of inflation targeting. But for Debt Management Office, it's about deficit covering and management, budget deficit management. So this time around, we believe there are concerns around debt servicing, percentage to revenue of the nation. So basically, in the last three auctions, the one-year instrument has closed at 20.7. Because of the hike we saw yesterday in MPR, in some corners and some quarters, we're seeing that some bids that were put in today by customers were higher than 21%. They want more. Those surplus units want more, obviously, very understandable because inflation is above 33%. And there's still a negative real rate of return, even at these 20% levels that you're seeing. So at 20.7, the effective yield was 26%. Investors are asking for more, but that is not good for the real sector, like most of the analysts have said, because, of course, you are battling inflation on one hand. The cost of lending would also trace along this hike in MPR. And then imagine wage increase on small, medium-scale businesses and other companies that are having to battle the cost of loan and wages. So basically, these are the challenges to the economy, but we believe they are just corrections and that the monetary authorities are quite aware of this, just chasing inflation and trying to pursue stability in the FX rate. So I believe that's the immediate objective. And then on the fiscal end, work is going on to ensure that we bring stability to the markets.
Yeah, so at this rate, Mr. Odusonya, do you see the DMO or the federal government looking inwards for more? I think they had a target of about 6 trillion naira for domestic market. Do you see them increasing that? Because it will even cost them more. You just talked about debt servicing and all of that. Perhaps at this rate, they will look inwards, domestic market, I mean, for more funding of the budgets.
Yes, the initial deficit was 10 trillion. And in the first quarter, the DMO had smartly front-loaded on their borrowing. What they did was that before the initial hike in MPR from 1875 to 22 levels, they had borrowed a lot ahead of this. I think they had it in line of sight, so they had borrowed a lot. And then what we're seeing since March is that The debt management office has just been rolling over matured T-bills, and they've not been selling more than they offered. So basically, they've front-loaded and they're at lower cost compared to where we are, but they're still issuing at these levels. But we don't see them moving rates to 25%, for instance, on bonds or on treasury bills yet. We don't expect that. I mean, on the side of the committee, of course, they have headroom to chase. We are currently at 26.2, and they could as well pursue, let's say, 30%. But for the debt management office, we believe the concerns are real. Debt servicing cost versus the revenue of the nation. It's a major concern. So we do not expect major hikes on rates at which these instruments are issued. Oh. Of course, there are expectations that the debt management office are also looking at issuing euro bonds, that is to raise some level of debt by way of foreign currency rather than just local currency, which they've done successfully. So we believe that will be coming into H2 as we round up this half of the year.
All right, Mr. Bankole Odusanya, thank you so much for that. We'll certainly be following the DMO and see if there are any adjustments. And of course, it's more expensive even when they go to the Eurobond market. But we'll follow it up, and thank you for your views this afternoon.
Thank you.